The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm your host, Alex Pang, along with my co-host, Alex Shanks. How are you doing?
I'm doing pretty good here today, Alex. How about yourself?
Oh man, it's been a busy last couple weeks. My son has his end and we just bought him a used car. Not 100%. We did a 50-50 split and we capped our contribution to $5,000. And of course, he's pushing us right to that limit. So we bought
Are you charging him interest on that 5%? Or on that 5,000?
No, it's the parents' thing. So we ended up buying a 2010 Acura TSX. So my father-in-law, he likes to buy and sell cars. So he buys them, fixes it up, and resells them, and that's how he makes his side hustle money that way. And so he got us a hookup from a mechanic friend. So this 2010 TSX is only 140,000 kilometers, no accidents. And initially, that same mechanic has a 2006 CSX, which is the kind of premium Civic version. And I brought my wife along, and we first looked at the car. I'm like, okay, it's nice and all, but it's small. But then we looked at the TSX, and me and my wife said the same thing. We like that car better, and it was within our price range. He was offering it for $8,500, and we talked him down to $7,800. So we're like, perfect deal. Let's do this. So we closed the deal yesterday. Been researching this whole last few weeks about getting him a Apple CarPlay, Android Auto kind of screen, those kind of touch screens. And those older cars don't have backup cameras. So it includes a backup camera. Just doing all this research and knick-knack stuff. And
nice.
He's already talked about wanting to fix it up.
Is he gonna have spinners? Is he gonna have spinners on it?
Oh my gosh, he's already like looking at this car has potential, and like he wants to put rims. And I told him about my experience because, hey, I did that with my car. Like, what was your first car?
It's exciting. So my first car was a Firefly, and I bought it for $500.
Wow.
And I took that thing for buying more than I've probably taken my trucks for buying. It was rolled a couple times. It was a pretty good vehicle.
Okay. How many kilometers did it have at the time?
I think I bought it with like 170, and then by the end of it, when I sold it, I think there was like near 300. And I mean, like the clutch was gone.
Okay.
The person that came, I kind of felt bad. Like it was a son buying a vehicle for his mom because he wanted the vehicle. And like he gets in, he's like, "Oh yeah, mom, it's good. It's got a 6-CD changer. The clutch is good." And in my head, I'm like, this clutch is like, it's done for. Like it's about to fall off.
Right.
And last year I saw it in Port Alberni.
The exact same car?
The exact same car.
Okay.
Someone had slapped a tap out sticker on the back.
Yeah.
So I saw it and I'm like, I can't believe this car is still running.
Wow. So when you got it, how old was it at the time? Like what year did you buy it and what year was the car?
Oh, I mean, I bought it when did I buy it? Bought it in 2005, I think. 2005, 2004. I don't even know when I got trying to think of that, but I think it was like a 1995, 1994 or something. Like it was older, but someone had upgraded the stereo and stuff. And that's all you cared about back in the day was like, I just want a cool stereo. So I crank it up.
Oh man. So I got my first car when it was 96. It was a 92 Acura Integra. And my parents bought it for me because I kind of got a scholarship at school. So they got me a car in exchange. My scholarship was covered. Just saying, that was the history being a nerdy kid. Yeah. So I wanted to drive standard too, because that's the cool thing. Like it's a right of a man to drive standard, but they wouldn't buy me a standard.
Totally.
So they got me an automatic.
Oh, really?
Not the top model. It was an LS. So there's no air conditioning in the car. Yeah. And at the time, we didn't have global warming.
I didn't have air conditioning either.
Yeah, we didn't worry about global warming. So I'm like, it doesn't get hot enough in Vancouver to need AC. Well, surprise, it did.
It got hot that year.
Yeah. So I did the same thing. Wanted to slam. I did all the things. I slammed it, put rims, put two 10-inch subs, put headers, exhaust, everything. The saying is I riced it out.
Yeah. That
Exactly.
is
So,
it. I mean, I'd call that a Vancouver special.
man, because when you're young, all you think about is I gotta look cool in front of the club when I'm driving my girlfriend and
Oh
pumping
yeah,
the stereo where it's
yeah.
and then when I'm going to my
I
girl.
can't even listen to loud music now. I
Oh
hate
my
it.
goodness.
Like when people have loud music in the car, I hate it. I'm like, I can't hear anyone talk.
Yeah, when we're looking at used cars, they were some marketplace had an aftermarket muffler. I'm like, no, don't want it.
Yeah.
I used to, but
No.
now everything
Yeah.
is quiet.
Yeah.
Yeah, so
Yeah.
exciting times for him, and we're excited too
That's
to give him a little bit of freedom, but teaching him how to
totally. Yeah.
maintain the car and keep an eye on things because he's completely green. So just kind of passing on the buck on that, right?
Yeah. Nice. That's a fun thing. I remember changing the oil with my dad in my truck. We even like my first brakes. I took it to a place and it was going to be like $2,000. And I'm like, no, I'm going to do this myself. Learned how to change the brakes and everything. It's a fun thing to do. I'm excited to do that with my kids as they get older as well.
Yeah, exactly. Like I remember learning how to change the oil in my car because I wanted to save money. So I don't think I know how to change the oil on those cars, but I'm like, I told my son, YouTube is your friend. Like if you want to, it costs about $100 for a synthetic oil change. It's once every 8,000 kilometers, but hey, you want to save money? YouTube's your friend. Let's learn how to do this, and I can help you out with that.
Exactly.
So we got a big show coming up.
Let's jump into let's jump into this stuff. Tell me, it was another crazy week. The government, obviously, we can tell that election's coming up. Everyone's trying to pull all the hats out to make the Canadian homeowners happy.
Yeah, so I can just smell the desperation in the air. Like all these news, like when they're in power and election is like far, far away, we don't hear anything. But as soon as election's coming and they're down in the polls, they are desperate. So okay, so I'm gonna start off. The government has allowed insured refinancing. Now we haven't had insured refinances in 2016 or something like that.
Okay.
Yeah, quite a while.
I remember it's been a while.
Yeah, I've actually never done it myself, but they're allowing insured refinances up to 90% loan to value. So for those of you who don't know what loan to value is, it's the amount that you're borrowing relative to the value of your home. So let's say, for instance, you are borrowing 900,000 and your home is 1 million. That's 90% loan to value. Okay. So, and that's starting January the 15th, 2015. But there is a huge caveat that must be for the purposes of renovating to create additional suites or laneway in the home. So I'm just going to read out all the caveats and the stipulations. This is a big one. The as improved value is capped at 2 million. So that captures the GTA and the Vancouver market. You'll get
and it's crazy. It's going above. Yeah. It's going above the 1.5 that we were going to be allowed insured. It's now taking that to $2 million.
Exactly. It's like these infomercials, and they're like, "But wait, there's more. If you call within 30 minutes, we won't give you 2, but 3." My goodness,
that's what it sure feels like.
Yeah, it seems like what's next, right? Other stipulations is you must already own the home. So this is not meant for purchases. It's for refinancing only. And you can go up to 30-year amortization. You can add up to 4 units, including the existing one. Now, between you and I, the GTA in Vancouver, it'll probably be only 1 or 2 units. But if anywhere else in the country, the 4 units could be feasible on that rate. For the units, it must be self-contained with a separate entrance, kitchen, and bathroom. And it has to be long-term rental, not short-term like Airbnb and Verbos.
That one I don't fully understand how they're going to like track that. Like we have in BC, there is a short, like you can get like funding to build a suite in your house right now. And that one you have to guarantee like below like the average rent in your area. That one I can see because they have to see like a tenancy agreement. I don't fully understand how they're going to track this down. Are they going to come up to every rental and say, hey, you're not renting it outright? Like, because what if you just don't rent it out? I don't fully understand how they're going to track it all.
You bring up a good point. You reminded me of that. That was announced a couple years ago, right?
A year and a half ago. It was for like $40,000. Like no one's used it.
Exactly. I was even going to ask you that. Has anybody done? I have not done one mortgage or anybody inquire about that. So I mean, it sounds.
It's too many. Again,
This is
you have to do below market. You have to have people. This one, I can see more people looking at doing. But again, we're going to get back to the conversation of, do you want a renter in your house in BC or GTA? Like, that's what everyone's caveat to this is like, oh, cool. I can make my house nicer, but I don't want a renter in my house.
Yeah, I mean, the details have not yet been released. So I can imagine the stipulations being similar to like a purchase plus improvements kind of program where you would need to get quotes, like detailed quotes and with full receipts and all that stuff. So any of the people that you guys who do cash jobs is not going to apply. So you're going to have to pay the taxes on it.
I saw someone post about the government created like the BRRRR method where you buy, refinance, and use the equity. Well, this one has said first time home buyer. It's not going to work like that. You're not going to be able to go and do some of this work yourself and try and get cash out. It seems like this is going to be very documented. The builder is going to have to be signed up at the lawyer's office. The funds are only going to be released to the lawyer, to the builder. It's not going to be a cash grab.
I wonder if this program is going to be similar to like the purchase plus improvements, where essentially you almost have to prepay for your renovations before you get the money back. Some of it. Yeah,
I think.
Yeah,
so.
I can see that because the other way,
we know. We got some lenders that do like the progress draw. We're lucky enough to have a couple of those that will give some of those funds now. And that's what I think you're going to have to go to the lenders that allow this. Because if not, how are you? Some people aren't sitting on an extra 100K cash.
Exactly. If you do it the other way, then it's probably more like a construction loan. So I imagine you would have to prepay for it all, submit the receipts, and there's an appraiser or inspector needs to come to sign off on it. Then you're right. The lawyer is hanging on to the funds. And then once it satisfies all these checks and balances and stuff, then the lawyer releases the money.
I heard about this person tell me about in Alberta, where obviously home prices are cheaper, is that the way that they do, because when you talk about that purchase plus, like Alex is saying there, even if you can get someone to get yourself 50K extra to do the work, you have to fund the money first. Usually you have to pay the builder or the contractor. There's some companies in Alberta supposedly that will fully fund it for you, say, hey, this is going to cost 50,000. They don't charge you anything, and then they get it right from the lawyer. And that's where I mean, there could be a niche for some builders actually with this to say, hey, I have cash to like front run this for you. It's going to be like a little bit more because I'm doing that, but then you may not be able to, you don't have to come up with that 100K.
Yeah.
You might have to talk to some builder friends.
I can imagine some builders who do it will offer it up front, but they'll charge an interest for it. There's a cost for using that money.
Oh, 100%. Yeah. There's going to be a cost.
There is no free lunch in this world. You know, I even imagine too, like, I haven't done too many purchase plus improvements in the past. And there's one that I can think of. Once you submit the quote, oftentimes when you renovate, you make changes, right? There's oftentimes changes because, I want to do this. But like, that's getting too expensive. I got to change that. And because you're involving the lender and the bank, and you need to stick to what the initial quote is in order to get the money. You can't really deviate, right? So I can see it. It sounds great, but logistically, it could be a nightmare.
Yeah, to me, I can see it as we get in here more. We'll talk about that $2 million. I could start to see it more for families that are maybe trying to make that like generation, like living and stuff. That to me is where now certain lenders also don't take the rental income of doing this until your suite is built, which is a hard one to go and now qualify. There is some lenders that will actually let you use the potential rental income. And again, it's just trying to find how does someone qualify for a $2 million mortgage, Alex?
Yeah, it's essentially like you put the nail on the head. Most lenders won't do the potential rental. It needs to be existing already. So it's almost like you're shutting out all the banks and credit unions, and you would need a B lender. But B lenders work in, and especially if it's in the insured space, then it needs to be an existing suite. So I'm interested to see how lenders will play ball with this new program.
You know, I did talk to a local credit union, and they're going to be able to do it on the insured side. And he actually told me that the CMHC, there's just so people know, there's 3 different types of mortgage insurers in Canada. everyone just thinks it's CMHC, but there's CMHC, Sagan, and Canon Guarantee. He says it's already allowed by CMHC and Sagan to use the potential rental income. And so I know that this credit union, they're going to be doing it. I'll give them a shout out, Interior Savings. They're going to be allowing people to use that income to qualify.
The one caveat is Interior Savings only operates in the interior.
They're all across the BC now.
Okay. I believe Interior Savings recently, they're partnered with, they've amalgamated to Beam Credit Union or something like that, right?
Exactly. Yeah. That's where, they're getting a bunch of different credit unions across. And that's, again, for people to understand, there's like banks, they have to go by certain standards. Monoline lenders have to go by certain standards. Credit unions can sometimes play outside the box because they're not federally regulated. They're provincially regulated. And so they can sometimes do better things, but it comes with a caveat. Their rates are higher.
Exactly. So I just like how we talked about on that when that insured cap went to 1.5. I did an exercise just to figure out how much income you would need to qualify if you went 90% loan to value up to 2 million. All right.
2 million. Yeah.
Of course, there's insurance. If we follow the same insurance rates, it would be 4%. So you're taking out a 1.8 million mortgage on 2 million. It's not straight that. There's insurance on top of that. So let's say 4% of 1.8 million, that's 72,000. So you're taking on a 1.872 million mortgage. Now, I tried to pick the easiest qualifying would be a short-term fix right now. Let's say it's 4.5% because it has a lower qualifying rate. Now, I'm just only looking at GTA Vancouver-ish. Property taxes about 7,000 a year, give or take. Homes in that range are probably around 4,000 square feet. If we're looking outside of Vancouver GTA, you're probably talking like a 10,000 square foot mansion, right? Let's not talk about that. I'm just looking at the larger population. 4,000 square foot home, you probably get only 2 suites out of it extra. So being conservative, $1,500 a month per suite. Now, depending, like Alex said, some lenders treat rental income more favorably, others not as favorably. So I'm going to use the worst case scenario.
Conservative.
The income you need to qualify for a 1.872 million mortgage is $385,000. So just like before,
that's easy.
If you
work at Dairy Queen,
make a lot of money, you're going to need mom, dad, grandma, grandpa. You're going to need everyone to go on title to help you with that. Yeah, this sounds good on paper, but let's see if you can qualify.
And I mean, I'm just going back of what our $1.4 million mortgage cost. We were around like $7,000. Let's say we're probably at near 10 or 11 now for this one. 10, and even if you can minus 4,000, like you're still paying $6,000 a month. Like it's not gonna make it cheaper for people.
Yeah. Even if you're going to go into this, you know what? I'm wondering about this whole caveat about by adding more suites. Does it have to be rental suites, or can you build the suites for family to come and use? That kind of thing. That's what I'm interested to know.
That's what I mean. That's where I don't know. And again, I could see it like that. The BC one that came out, it had to be for rental, and you had to prove that you had a lease in place below market rents. This one, I haven't seen any of that, but yeah, I mean, they're doing this with the whole goal of trying to create rental. Like that's what this is about, people, is it's not to build it for people to increase their homes. This is going to boost home prices, but it's to try and bring more rentals. But we've talked about this before. Not many people want renters in their house, especially in BC and GTA, because once you get them in, they're not leaving.
Yeah, I mean, we have renters in our home. We've kind of come to terms with it. So again, if you find good renters, you got to screen properly up front because yes, Ontario, BC, rent controlled. Once they're in, it's hard to get out. So it's better to screen properly up front. Okay, so there's more. Government is also planning other things. What do you think? Do you want to go ahead and share it?
Yeah, people have empty lots sitting around, and I mean, a lot of people, developers waiting, they can't build, and so they want to start taxing these things to get people to build. And I mean, just have we learned nothing that taxing people just to try and get something done doesn't work? Like I don't know how many times we have to try something.
Yeah, so what I was looking at, they are wanting to adopt something similar to what Ireland does, and they tax vacant lands 3% per year. So let's just think about this for a second. Most people don't just carry empty land, right? I mean, if you think about it, most people, like the ones who own vacant land and don't do anything with it, are mostly the developers, right? They wait till,
depending, I would say on the island, there's a little bit more, like people will buy, like back in the day, like maybe you bought a house and then a lot came up. On the island, I would say there's a bit of a different story, and maybe northern BC, like people have land because they just want to not have neighbors.
Mhm.
Vancouver, obviously, completely different story, but it's just forcing people to do something, and it's give someone a reason to want to build, give you a benefit to the developer, to the person of like, hey, we're going to help you. I mean, they talked about our last podcast. We talked about the leaseholds of like giving funds for that. I mean, why don't we talk about that for vacant land?
Yeah, I mean, like taxing people does not encourage them to do it. You have to create the conditions where it makes it conducive to build. And I talked about it in a previous podcast. You need to lower development fees. There's a lot of the rich developers, especially the wealthy 5 developer families in the lower mainland, they can afford to sit on land because the conditions aren't right to develop, because interest rates are high, development costs are high, and they've done their research that once they build it, what their cost is for the unit and what they can sell it for, because the builders are not doing it for free. They're going to make a profit, and whatever profit they can make, is that at that price level, is it going to sell? No, it's not. And what they do, they can afford to sit on it. So what you're telling you're telling the Ani families, the Boza families, or whoever, that we're going to tax you on that land. Do you think they're going to be happy about it? Probably not. So I'm interested to see. They're in talks about it. I doubt if it would go through, but you know what? Hard to say when it comes to election.
Oh, I got something I wanted to bring up because this has to do with election and stuff. And I mean, sorry to attack, I'm not going to attack the boomers here, but I was talking with someone. And this is the first I've ever heard. They're worried about the conservatives coming in power because they don't want their home price to fall. I hope that sits in for people, that our home prices have increased so dramatically since 2015 when liberals have gotten in power. They're scared to let another party in because they don't want their home price to fall, which I think is sad to know that someone is more worried about just what they get than thinking about others. It's like, I'd be fine if my home just stayed flat, even if it dropped a bit.
Yeah.
If I knew more people could buy a house, it really threw me off. I'm like, holy shit, I've never heard that about the conservatives.
I think like the US, they are more capitalist in terms of society. Like, yeah, Canada's capitalist too, but US more so. Based on their government policies and their free market society, they are fully okay with market, like when recession happens, that values go down for the market to cleanse itself, for things to right the ship. That's what a free market capitalist society would do. Canada, I don't think we're not like that here. It seems like because the boomer generation is a large voting bloc and the majority of boomers do vote more so than the young people. Trudeau said the quiet thing out loud. We can't let home prices drop too much because enough Canadians have their retirement in it. That's great for them. But you know what it does? It creates a dichotomy. It shuts out the first time buyer because they can't afford it. So we all know to make it more affordable, home prices need to go down. So the government is kind of saying we can't let it go down. I mean, it has gone down from the interest rate increases, but it's not one of those long-term solution kind of things. And
I mean, they've put a floor in now with all these new policies. It's like they're pretty much putting a floor into real estate. So it's like, we're not going to we don't want it to fall.
Exactly. So instead of making it more affordable, they're making it just easier for people to take on more debt. So like, just think about it for a second. Like now, like people having $1 million mortgages is going to be the norm. Like it's becoming kind of the norm in Vancouver and Toronto, but If you talk to somebody outside in like other parts of the country, even a 200,000 mortgage seems like a big thing. But for us in the Lower Mainland GTA, it's not a big deal because it's the only way you could live here. So sorry, that's our rant.
That's
but
what I mean. We can go back. It's I don't think it's going to work. But now let's talk about some interest rate things. And again, people really, I'm going to hammer this home because I get asked it every single day. Well, if the Bank of Canada drops, my fixed rate's going to drop, right, Alex?
No, not necessarily.
Fixed rate mortgages they're based on the bond yields, and we actually had a decent increase the last week, haven't we there, Alex?
Yeah, so there was a positive job report in the US. They released a report that there was more jobs than that was added as expected. So what it did was bond yields went up for the last, I would say probably a week or two or so, a bit, right? So
it went from like 2.6 something
to 3. So we're not seeing it too much, but there has been some talk of maybe fixed rates going up. So we all know that interest rates are going to are trending downwards, right? This whole longer view, but it's not a straight line down. There's some bumps along the road. So it is like, we haven't seen many increases yet, but if bond yields stay elevated, we could see some fixed rates go up a bit. But the long term is going to go back down. Now, because of that news.
But is it?
Yeah.
But is the question though, Alex, is it like fixed rates? Like, is this the lowest? Like, I mean, the market has priced in that the variable rate is going to drop. And there's always been talks of that. And is it, well, I saw Desjardins came out with a report saying that they said that this could be where fixed rates stay. And ideally, the last 35 years, variable rate has always been under a fixed rate. We're at a very different spread here. And that's where I just think people are really having a hard time understanding that when people say rates are coming down, it doesn't solely mean that fixed rates are going to come down. It could be variable rates. Are they going to come down further? And that's where, like we were talking about here, there was a big chance of a 50% cut in at the end of October here.
Yeah.
I think that's, to me, is more 0.25.
Yeah.
I don't think we're going to see a 0.5%.
I think after that, I mean, RBC even came out to thinking that it would be a 50 basis point cut. Yeah, I think it's probably more like a 25 now based on what we're seeing. So
I don't think we need to do it yet. I mean, I don't want to like put a freaking match on the real estate market here. I feel like if we keep doing 0.25, I feel like if we see what happens in the new year, maybe if recession, but do you think the governments are like trying to hide a recession by these job reports? Like, do you think they're trying to prop stuff up that way? What's your thoughts?
I honestly don't know. Steve Saretsky mentioned it in his Looney Hour podcast. They call it the random number generator. When they release job reports.
And how wrong is that? Like, I remember back earlier this year, the job reports came out that we added like 100,000 jobs. It's skyrocketed the bond yield.
Where's the jobs?
And then it came out 2 months later, like, oh yeah, we did that wrong. It was 20,000, not 100. It's like how do you get that math wrong?
Yeah, exactly. And who oversees it? Like, we are just supposed to believe what you tell us, and then based on that, that manipulates the market and everything like that. So
yeah,
but yeah, so I mean, we might see a little bit, but just know that the long-term trajectory is rates are coming down, but it's not linear. It could bump up a little bit. This is probably more like a little bump on the road on the way down. So not to worry about it.
And that's where one thing we didn't get in there is that on the fixed rate side, you can get rate holds. And so the thing for me, I always watch for all my clients. I mean, I don't use the rate hold until I know rates are going to go up. We all usually get emails from lenders saying, hey, Alex, the rates are going to be increasing by 0.25% tonight. And that's where you want someone that can work with you to make sure that they protect you.
Absolutely. Absolutely. Next thing I want to talk about, not really housing related, but it's just as a concerned citizen, I'm seeing a lot of Hamas protests across the country, in Vancouver, Toronto, Montreal. Apparently they were just protesting or demonstrating because they're celebrating the attack on Israel that killed 1,200 people a year ago. And like here in Vancouver, I think they were in front of the art gallery. They were chanting "Death to Canada,"
I think so.
"Death to USA," and they were burning the Canadian flag. I'm like,
yeah.
And in Montreal, they're smashing windows at McGill University. We know it's the whole, Jewish and Palestinian feuding. It's gone on since biblical times, right? With the Philistines and the Jews and all that stuff. And it seems like it's never ending. And like, I don't know what to go with this, but like, it seems like because of our mass immigration, of course, I'm not saying that every immigrant is like that, but like, it seems like the bad apples are sleeping through the cracks and they're finding their way into Canada. Like, what do you make of this? Like, I'm worried for our country.
It scares me. I mean, it scares me for my kids and everything. I feel for the Jews and the Palestinians, like everyone, like just killing for no reason. Like I sometimes have to like keep it out of my mind. It's so scary what happens outside of our country. And I think we're all immune to it, but it's pretty sad what happens everywhere else. And then obviously it coming into Canada, that's even scarier as well.
Yeah, I know. I get it too. Like, I have a friend, she's Palestinian, and so she's obviously on that side. And she was mentioning about like, oh, the media is so like, they only filter what you don't know the whole story and all that. And I didn't want to get in with her because I'm like, it's only what I know and what I hear. So I have no skin in the game, but
and I mean, hey, I understand like the story of like all the stuff what happened between them, but again, like killing people for no reason, like that, just like there shouldn't even be a question. Like it should be, hey, you've killed someone, there's something bad there.
And the fact that you're just saying death to Canada, death to USA, it means that you are. Let me finish off this point. But they're basically saying that you are against capitalism in North America. So, and this got to stop, man.
I think so. That's the main thing. We want this to be stopped. We want there to be peace for everyone.
Absolutely.
Now, I want to bring it back to a little bit more of a happy time here. What's happening for you and me tomorrow, Alex? What do we got going on?
Oh, yes. So for you viewers, listeners, I've only met Alex one time in person. So the whole story is we met through TikTok a couple years ago. We stayed in touch. We met up for coffee once when Alex was here for a conference. We started a podcast, and Alex is coming into town. There is a industry event that Alex is coming to. So I'm like, hey, let's meet up. We're going to go to that together tomorrow. Alex is taking the ferry. He's getting up at 5 a.m. tomorrow. And
it's going to be an early one.
Yeah. So we have an afternoon event, and the Canucks are playing tomorrow. And I have tickets to the game tomorrow. So I'm taking Alex to a game. He's going to wear his Leafs jersey.
Might be wearing a jersey.
And, man, I'm even going to heckle him. So it's going to be fun. It'll be a good time. But yeah.
No, I'm excited. It's going to be a good time. And yeah, I mean, it's been really fun, Alex, going to do this podcast with you. I mean, we're on, this is recording episode 8. I mean, we have recorded some other ones, but I mean, so cool getting to spend this time with you. And I'm excited to catch up again in person as well.
Yeah. And for you guys, we're going to post some pictures on social media. Alex is 1 foot taller than me. He's 6'7". I'm 5'8". So I'm like, you can sit down, I'll stand up, and we'll feel good.
Yeah, exactly. At the hockey game, you won't be able to stand up.
Oh gosh.
Or no, you'll stand up, I'll sit down.
Yeah, exactly. And when they start heckling you, you can just stand up, and everyone's, oh, it's David, it's Goliath here. Okay, keep your mouth shut. All right. Well, before we finish off, we have a viewer mailbag, right?
Yeah, it's the best time. It's where we get to answer some questions.
Well, absolutely. Let me read
this first one. How about I get the first one for you, and then you can ask the second one.
Sure.
So this one's asking, and I'll add I'm going to add an extra thing to this. They have a line of credit. Can they use that as a down payment on a home? Now we don't know, is this a first time home buyer? But also, can I use a credit card, Alex, as a down payment on a home?
No. Technically, yes. Not every lender allows it. But what we'd have to do on the mortgage side is, not to get super technical now, is as brokers, we need to use the amount that you're taking. So let's say a line of credit, you have 20 grand on it, right? You pull the 20 grand. We have to apply 3% as a monthly payment. And that goes against what you can borrow. So what's 3% of 20 grand? Is that 600 bucks? 600 bucks. That's essentially a car payment. And essentially every $400 to $500 a month you pay towards something, either car payments, student loan, whatever, it reduces what you can borrow by 100 grand. So technically, yes, you can, but financially, we don't advise it, because not only you're borrowing from your line of credit, you're paying a mortgage. So you're going to enter this never ending cycle of debt and you'll never get out of it. So while you can do it, you have to qualify. Yes, you can borrow off your credit card, but it's a cash advance. So you're
20%,
20 to 30% in some, and it starts right away. There's no grace period. While you can do it, we don't advise it. And if you have to pull out of a credit card, you shouldn't buy. That's the like, while technically you can, we just don't advise it, because it's going down a rabbit hole of you shouldn't buy, or if you do end up buying, you're going to be broke and you're going to go bankrupt, or you're going down this debt rabbit hole that you'll never get out of. So we don't recommend it.
It's funny, people, the way that mortgages done are in the US and Canada, they're so different. And people watch these videos on YouTube of the US of, don't worry, you can buy the house with 0% down, use your credit card, you'll buy that house, go and buy the next house. It doesn't work here. We don't have houses for 100K in Canada, and it's not. Now, I'll say I've had a few people use the borrowed down payment from the line of credit, but we had it for a reason. For one, their incomes have grown and they have a lot of income that way, which makes sense. They just couldn't save up the funds because they had just finished school and their income started to grow.
Yeah.
The other one is people knew that they were going to get an inheritance, but we didn't have the funds yet and they found the perfect house. And so it can make sense. But like Alex said, like if you're just doing it from your credit card or just doing it to try and buy, make sure that there's a plan, not just, hey, I'm going to borrow $30,000 from a line of credit for a down payment.
Yeah. And at the same time, already paying $800 a month for my car. So you're going to pay for your line of credit, pay for your car, and pay for the mortgage. And I only make 80 grand a year. I'm like, no, don't do it. Save up some money, ask the bank of mom and dad, pick up a second job, save some money, set yourself up right, or else don't go down the wrong path, or else you'll never get out of it. All right.
No,
okay.
Exactly.
All right. So the second one here is, can I convert my principal residence to a investment property?
It's funny, Alex. I didn't make up this question before but I'm dealing with this on someone else to try and help them. And now it depends, like, again, a principal residence you could have bought with minimum down and everything. We're just going to pretend that you've owned the house for the last 5 years. Now you can convert your principal residence into an investment property and go buy a next property. We get to use potential rental income from that property and everything. Now, a big one, and my accountant just went over this with me, that people really need to be aware of. If you're going to convert your principal residence to an investment property, the year that you do that, you need to sign a disposition form on the taxes. I'm going to use an easy number of, say, I'm going to convert my my principal to a rental. It's worth $1 million. From that day, you're only paying capital gains from that increase, from anything above $1 million on. So let's say if you did that, Alex, you came to me, converted your principal residence to it, and say 5 years later, it's worth 1.2 million. You're only going to pay capital gains on that 200,000. Now, if you don't do that deemed disposition, you're also meant to get like an appraisal report confirming the value. Maybe you could use like the BC assessment if you're in BC. CRA could argue it, is that market value? But if you don't do it and you want to go backwards, they can charge you up to $100 a month, up to $8,000 to go and change your tax form. So that's not so great. And if you don't have that, there's a different calculation. They do it on a weighted average of like the entire time you own the home. And so it's something really important that people need to pay attention to if they're looking at like getting an investment property, trying to buy another home. We'd even add that in here, but saying using your funds from your principal residence to go buy another property. Like if you had a home equity line of credit, that's easier than a line of credit, but it just has to be done properly.
Yeah. So what we see a lot is people owning condos and they are able to keep their condo. Like we're able to qualify them, and based on the price range, they can keep their condo, which they used to live in, upgrade to either a townhouse or detached, keep the condo converted into a rental. So what we're saying is you can make that happen. We can do it on the mortgage side, but make sure you consult an accountant to see how it works on the taxation part.
100%. And that's where right now, and hopefully that the government never comes after it, when you sell a principal residence, you don't pay capital gains at all. You can make $1 million profit. You don't pay any taxes. Now, for some people, having some write-offs with a mortgage and stuff can make sense. You could refinance. But again, like for me, I deal with mortgages, but I want to make sure I talk with someone's financial planner, someone's accountant. Like, does this actually make sense? It's easy to say you qualify for something, but it may actually not be what's best for them.
Absolutely. Okay, I think that wraps it up. Anything else you want to add, Alex?
No, I think that was a pretty good one. I mean, it just seems like we're just getting all the government news. I'm just like, what could they come out with next week? Maybe they're gonna say every person. I mean, the BC government talking about, hey, everyone's gonna get $1,000. Maybe the federal government's gonna say, hey, everyone gets 20,000 as a down payment. Maybe that's the next thing they're gonna come out with.
So there's another a mortgage news site that I go to regularly that Alex is also aware of. There is now, obviously, this is more tinfoil hat stuff. There might be a possibility they're considering removing the stress test altogether, not just on switches. And so that would be great. That would be one of those hallelujah.
Yep.
But yeah, we'll see if that happens. But that would be big news if it does. But
yeah, that's where, I mean, I could see that. I feel like that's something to me that they should bring in for sure for first-time home buyers. Like, I think if you're going to buy rental properties, no, you have to qualify on a stress test. Like, make it a bit harder. Like, we don't want to just have people that can just keep buying. And so, yeah, I think we need to change something.
Yeah, absolutely. Okay, I think this about wraps it up. On behalf of my co-host Alex Shanks, I'm Alex Pang. Thanks for tuning in to this episode. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.